Hello, this is David Xie with the Xie Mortgage Team, and today I'm going to talk to you about something that I'm very passionate about, and that's short-term rentals. So, aka Vrbo, Airbnb. I recently watched a Netflix video on Airbnb, and I was just so taken back about how we now have an opportunity to live in other people's places that they fully furnished. And, we can do things like, cook at the house, have more of our family and friends together. So one of the biggest topics that I've noticed that have really come up on some of the groups that I follow are, how do I get financing for these short-term rental properties? Number one, how do I make my offer stand out when there's such a high demand for short-term rental properties? And what's the best way to finance my property? So when you're looking at financing a short-term rental property, one of the great benefits is, if you're willing to put up with, the work that's involved with the short-term rental financing or management of the home, or even hire a professional, and you can actually deal with it and, do all the repairs and, do all the steps to make sure you succeed, it can be a very lucrative business. With that being said, one of the biggest challenges is getting financing. So I'm going to tell you a couple different ways that you can do the financing. Number one, with a short-term rental, you can do it as a second home. Okay, you could purchase it with 10% down. The 2022 conforming loan limits have recently risen. So, we're going to be able to give you a little more buying power. And as long as you stay in the property at least 15 days a year, you can do the second home financing. The only downside to the second home financing is that you cannot count any rental income to offset your debt to income ratio. Secondly, you can do the short-term rental financing with a traditional conventional loan where you're buying it as an investment property with 20% down, even 25% down if it's a multi-unit, or get better financing terms with a condo. One of the good things about that is with 20% down, you can take that rental income and you can offset the proposed mortgage payment. We actually have a couple other products that we can, use to finance it with my team, and that's going to be a debt service coverage ratio loan. So the beauty of this loan is that if you have, too much financing through Fannie Mae, or you have so many properties and you need to close in a quick amount of time, and you don't want to pull up all the mortgage statements, the tax returns, and association fees and taxes and insurance on your properties, this debt service coverage ratio loan is great for you. So the way that works is we will give you a loan as long as you have 20% down. And the way that this works is with 20% down, we're going to get an appraisal and we're going to get a rent comp schedule. The rent comp schedule is going to tell us how much we can make off of the rental property. And then your mortgage payment is going to be your proposed PITI, which is principal, interest, taxes, and insurance. As long as we can meet 70% of the coverage ratio, so if I propose to you $1,000 a month mortgage payment, as long as that rent comp schedule that came back from the appraiser can cover at least $700, that 70% coverage ratio, we can do the loan. There's a lot less limited documentation. The loan can be put into an LLC, and I've got a lot of success helping my fellow short-term rental Airbnbers or Vrboers. So I would love to help you out and go over all the different options on how you can qualify for short-term rentals. So please feel free to give me and my team a call at 757-478-8493. And this is David Xie with the Xie Mortgage Team.